The more you solve question, the more you are familiar with the jargons. So please solve more question on what you have done so far on performance management. It is not only on performance management as well as other courses. Right. So in today's class, we shall look at another topic, which is throughput accounting. So please, do we have a new member here? If you are just joining us for the first time, you can unmute your mic. Tell us your name and your location. A quick
Good evening,
one.
sir.
Yeah, good evening.
Good evening, everyone. Good evening, sir.
Good evening.
My name is Ade Tobiloba. I'm calling from Ibejuleki, and this is my first time in class. I hope to learn more. Thank you, sir.
You're welcome, Adiri. You're welcome to Next Gen Professional Associates.
Thank you, sir.
You're welcome. So do we have any other new member?
Good evening, sir.
Good evening.
My name is Similain Seidu. I'm calling from Alimosho.
Lagos.
I'm here for your Telema. Your Lagos.
Okay, that's fine. You're welcome to Next Gen Professional Associates. You can always check, you can type on Google, on YouTube, type Next Gen Professional Associates, right? You will see the previous lecture that we've done so far. Just check PM playlist, right? And the details of the material will be sent to the platform immediately after this class. Thank you. Please, do we have any other new member? Okay. Good evening, everyone, once again. You are welcome to another edition of our lecture on performance management under the decision-making throughput accounting. The question now is, what is throughput accounting and what does it use for? Throughput accounting is a system. Throughput accounting is a system of costs and management accounting, which is primarily designed for use in a just-in-time environment. Meaning that when you want to use throughput accounting, it is mainly used in a just-in-time environment. The question is, what is just-in-time? Just-in-time means that I can only produce this product when it is needed. In some restaurants, when you go there to buy food, right, they will tell you that you have to wait for 20 minutes, right? It means that it is not available. The food is not available. They have to just use that 20 minutes to do what? They have the resources, but the food is not available. They just have to use that 20 minutes to do what? To make the food. And that is just-in-time system. And what is the purpose of just-in-time system? Is to reduce wastage, because the theory believes that when you produce more goods and it is not needed, you produce that goods, you just produce it, and having the expectation that consumers or buyers or customers will come and purchase that particular what? We come and purchase that particular what? That particular what is it called? That particular goods, Is that not so? So with that, what is the probability that you will sell 50,000 in a week? It is not starting. And that is why throughput accounting now came into existence to say we want to operate on just-in-time environment. Now, it is a product management system which aims to maximize throughput and therefore cash generation from sales rather than profit. Throughput accounting did not actually believe in profit. It believes in sales, right? It believes in sales. You come to the restaurant, what did you want? You want this. Okay, give us 20 minutes. We'll do it for you, right? So it believes in cash generation from sales rather than what? Rather than profit. The theory of constraint is an approach to production management which aims to maximize sales revenue, less material and variable costs, variable overhead costs. Class. Under the concept, under the theory of throughput accounting, there is what we call constraint or bottleneck, and is an approach to manage production management which aims to maximize the sales minus material and variable costs. It focuses on factors such as bottlenecks, which act as a constraint to maximization. Under the throughput accounting believes that it is not limiting factor. It is what we call constraint or bottlenecks that will affect their output, that will affect them not to achieve their objective under the concept of throughput accounting. That is what it believes on, right? That what we believe is that it is not limiting factor, it is a bottlenecks, right? It is a what? Bottlenecks, or it can also be act as what? As a constraint. Class. Don't forget that throughput accounting did not believe in profit like that. They believe in cash generation, just-in-time system, whereby they can quickly make a sales. Once they make the sales, they have cash. They generate cash from sales. Is that not so? Now, this is a product management system aimed at converting material into sales as quickly as possible. Can you see? The overall aim to maximize throughput contribution is sales minus material cost. Class. Under the theory of throughput accounting, the only variable cost is material costs. And the question now is, even throughput accounting is actually right? It's correct, because let's look at it practically. You bring in a labor to come and produce, and when they come to produce, they will use 30 minutes to gossip. For those who work in civil service, they will use 20 minutes. Even in the private sector, before you will now see Mr. Moses, I see Mr. Moses' shoe. They like me, go on. So the hours that they're supposed to use in working, they will use it to gossip. At the end of the month, they will receive their salary. And you are telling me that labor is a variable cost? Now, if labor is a variable cost, they are not supposed to pay you because you did not work for that hours. They're not supposed to pay you. That is the argument, right? That is the argument. So you are telling me that labor is a variable cost, but this person is supposed to work for 5 hours, right? And he end up working for 4 hours. And at the end of the month, this person will still receive the same salary. So is it a variable cost? Is it not supposed to vary according to the numbers of hours that you worked? But it's not like that. But the theory of throughput accounting now says, this is it. To calculate throughput contribution, under the theory of limiting factor, you have your sales minus all your variable costs. We have contribution. Then, under the theory of throughput accounting, we have the throughput accounting is calculated as your sales minus what material cost, meaning that they can be able to convert their material to sales. When you go to restaurants now, you quickly go there. What did they put together? They put resources. They put their materials together to produce something. Quickly, it will change to what? It will change to what? Sales. They make a sales, right? So, to calculate throughput contribution is the sales minus material cost under the concept of what? The throughput accounting. Now, why keeping conversion costs? All operating costs except material costs. Class, any other costs is known as what? Conversion costs. Conversion costs. Exclude material. Meaning that your conversion cost is your total production cost. Exclude material that you've used it to determine your throughput contribution. Now, your conversion cost include your labor and your fixed overhead, as the case may be. Can you see? Any other costs are all conversion costs. Why? Throughput contribution is the sales minus the material. The only variable cost under the concept class, under the concept of throughput accounting is material. And the concept of throughput accounting is actually right. You can't add labor when you are not working. You are telling me that labor varies, but you will use like 2 seconds or 2 hours, most especially our ladies, right? Our ladies, we know them. So they say, see the way she dressed. You're supposed to be working, but you know, so that is it. But we in that process, you waste time, you waste some minutes. They are not supposed to pay you that actual amount. At the end of the month, they will still pay you. Is that not so? So that is the concept. So all other costs class are called what? Conversion costs. Class. Another factor that tries to hinder the objective is known as bottlenecks. I will explain that bottleneck resources under the concept of throughput accounting. It is not limiting factor, it's called constraint or bottleneck. Or you can call it binding constraint, right? Or a binding constraint. Now, a bottleneck resource is defined as what will make you not to achieve that objective. That is bottleneck. That is bottleneck, right? Class, we should not forget this. If you want to calculate throughput contribution, is sales minus material. The only variable cost is material costs. All other costs are called conversion costs. They are all overhead costs, including the labor, exclude material. Class. Now, the concept of throughput accounting. Let me quickly explain this before we go straight to calculation. Concept of throughput accounting. In the short run, most factory costs include labor costs, are fixed costs, except material. Class, in the short run, most factory costs include labor costs and fixed overhead, meaning that your conversion costs, your factory costs, your indirect, your overhead costs include the labor costs and fixed costs. And except material cost. Material cost is only cost that is what? That is variable cost. This is because all short-term manufacturing costs are likely predetermined and can be regarded as what? As fixed what? As fixed cost. Class, in the short run, most factory costs, including labor and fixed costs, except what? Except material what? Material costs. Inventory holding. under the theory of throughput accounting did not believe in having what is it called, inventory in your store. He doesn't believe that, because he believes that this inventory that you have in your store, it may lead to wastage of resources, right? Maybe obsolete, maybe the inventory you may not even use it, you may not even sell it, and what could have happened? Now, inventory holding is discouraged, and zero inventory, since throughput accounting operates under the concept of what? Just-in-time system. As you demand, we give you. Although even if the concept of just-in-time system has its own disadvantage, because if I'm hungry now, I enter your restaurant, I say I need sharp food. Then you now tell me to wait for 20 minutes. Okay, okay, I will wait for 20 minutes. To go, I will leave, because I'm hungry. I need to eat. That is one of the disadvantage of the world of the system class. So, and so on. And profitability is determined by the rate at which revenue is generated. Of course, under the theory of throughput accounting, your profit is based on what you sell, which depends on how quickly you can convert that your material to sales. How quickly goods can be produced to meet customer orders, and the rate at which the factory spend what? Money, right? How quickly you can meet up what? The demands of your customers, and the factory costs, which is the overhead what? The overhead costs. Class. The only direct material under the theory, there is what we call throughput contribution. To calculate throughput contribution is your sales minus your variable costs, minus your material costs. The only variable cost under the concept of throughput accounting is material cost. Any other costs are treated as what? As a conversion what? As a conversion cost. Class. Throughput accounting operates in what? In a just-in-time environment, just-in-time system. Now, what is the comparison between the throughput accounting and traditional? When they say traditional, class, what is traditional approach?
Total absorption costing. Total absorption costing.
Absorption costing, right? Okay, that's fine. Which makes sense. Absorption what? Absorption costing, right? Absorption what? Absorption costing. So you can read up the comparison of the two. I will share the notes, right? I will share the notes. Now, how to benefit? You can also read this. How to benefit or maximize the throughput accounting. Then we have to move to the calculation. The calculations in throughput accounting. Class, you have to pay attention. These are the calculations in what? In throughput accounting. Now, the most important step are to identify the bottleneck resources. The same process we use under the concept of limiting factor, right? The bottlenecks, the limiting factor, how to determine the limiting factor, or how to determine the limiting factor under the concept of limiting factor. You're required and you're available, whether you check the one that is the short for. Is that not so? The same applicable, the same process to apply under the theory of what? Of throughput accounting. Instead of calling it limiting factor, it is called bottleneck. Bottleneck resources. Bottleneck. Now, all calculations are usually focused on bottleneck. Bottleneck means what? Constraints. Constraint, bottleneck. Activity maximization. Now, the first thing is throughput contribution. If you want to determine throughput contribution is equals to the sales minus material costs, or your selling price. Your selling price minus your material cost per unit will give us the throughput contribution per unit, or your total sales minus your total material cost will give throughput contribution. All right, we give what? Throughput contribution. Now, how do we determine the profit? Is your throughput contribution minus your total conversion costs. Your conversion costs include the production costs except the material costs. You know, you've used material costs to determine the throughput contribution. Don't forget, under the theory of throughput accounting, all other costs except material costs are treated as conversion costs. All production costs include all production costs class. So your throughput contribution minus your total conversion cost will give what? The profits. Unlike under the theory of throughput, under the theory of limiting factor, your contribution minus fixed cost, where you have the sales minus all variable costs. You have contribution minus fixed cost, you have your profits. Now, the next is the bottleneck resources. Bottleneck means constraints. Now, if you want to check for efficiency, bottleneck resources efficiency or utilization rates, it is also known as utilization rates or efficiency. It is calculated as hours required. It can be hours, it can be kg required. Maybe hours required to produce that unit divided by the hours available. Just like when you want to check which one has the bottleneck between, you know, you need to use the hours required minus the hours available so that you know which one of these is the bottleneck or is the limiting factor. Under the theory of limiting factor, you can say which one of these is the limit. So the same thing, the hours required, that is the hours produced. Hours required means that the hours that will take you to produce that unit divided by the what? The hours available. Now, the next is the return per factory hour. Factory hour means the bottleneck. Return class. Return under the throughput accounting means throughputs. Return under the throughput accounting means what? Throughput. Return, that is sales minus direct material costs. Sales minus direct material cost is throughput. That is your return. Then per you have to divide it per 1 divided by what? Divided by the factory hours. What is the factory hours? Factory hours means that the bottleneck. You can use bottleneck. That is why I say divided by the usage of bottleneck resources in hours. Meaning that under the theory of limiting factor, we have the sales minus variable cost. You have contribution per unit. Then you have what we call contribution per limiting factor. Is that not so? Now, under the theory of throughput accounting, you have return per factory hour. That is return throughput per bottleneck or throughput per limiting factor. It's still the same thing as contribution per limiting factor. Yeah, under the theory of throughput accounting, it is a return. That is throughput per bottleneck or throughput per limiting factor class. Now, if this is established, your sales minus the direct material cost will have a return. That is throughput per divided by the bottleneck per resources. Don't forget, per bottleneck per 1, hours per resources, per 1. When you divide it, you have what we call return per factory hour. is still the same thing as under the theory of limiting factor, contribution per limiting factor class. Now, the next formula you need to know under this theory of throughput accounting is what we call conversion cost per factory hour. The first thing is, if they say per one, means you have to divide it per. Now, what is conversion cost? Is all production costs exclude material costs. We should not forget this. Conversion cost means all costs exclude material costs per factory hour. Factory hour means bottleneck. Class, the factory hour means what? The bottleneck, right? Now, that is conversion cost per factory hour, or you can say conversion cost per available hours. Available what? Available hours. Can you see? Divided by factory hours per day. That is available. Depend on the period covered by the what? By the conversion cost. The conversion cost per factory hour means all the conversion costs divided by the available hours, available resources. Class, divided by the available what? Available resources. Next is to calculate throughput accounting ratio. Class, throughput accounting ratio. We've calculated the return per factory hour. The return per factory is equals to return per factory hour. Return per factory hour means that throughput per bottleneck is just like contribution per limiting factor, right? It's just like contribution per limiting factor. Class, it's just like contribution per what? Contribution per limiting factor. That is return per factory hour. That is your throughput divided by the bottleneck per hour. That is return per factory hour. That is why I say bottlenecks, right? Divided by the total conversion costs per factory hour. Conversion costs, all your conversion costs exclude material costs, divided by the bottlenecks, right? Divided by the factory hour, which is what? Which is the bottleneck. So it will not give you what? The throughput accounting ratio, right? It will give you what? Throughput accounting ratio. Now, there is a decision here. And what is the decision? It compares the income per hour, throughput contribution to cost. Now, where throughput accounting ratio is greater than 1, there is a decision here, right? When throughput accounting is greater than 1, the company makes cash whenever the product is produced, meaning that when you calculate the throughput accounting and it's greater than 1, it means that the company is generating more sales, more cash from that particular what? From that particular product, right? Now, in the other way around, when the product is produced, maybe it is less than 1, it means that the company is just losing money in that particular product. So therefore, the product should not be produced because it's not generating money. It's not generating cash flow. It's not generating what? Cash. We are not making money from this product. And that is what we call the throughput accounting ratio should be greater than 1. When a throughput accounting ratio is greater than 1, it means that the company generates more cash from that particular what? From that particular product. But if it is less than 1, meaning that we are losing money, so definitely you can advise the company not to produce that product. However, there is also a limitation to that, because if you advise the company not to produce that product, what if you have product A and product B, and it is for the purpose of product B that you want to discontinue? We'll get there, right? That is the reason why I'm patronizing your company. That because of that what is it called? Excuse me. That product B. And excuse me. And when you say you want to discontinue because you are not making money from there, so it could actually affect the company. We'll get there we'll get to that side under the theory of of discontinued operation as well as make or buy decision, right? So these are the things you need to know, especially under your throughput accounting ratio. You need to know how to calculate throughput accounting ratio. You need to know how to calculate the throughput per limiting factor, throughput per factory hour. That is throughput per bottleneck. That is contribution per limiting factor. Under the theory of what? Under the theory of limiting factor. So I think I've been able to explain, right? So you can read through the limitation and the benefits of this. So I have an illustrations here. So before we move, please, do you have anyone that have question? If you have question, quickly unmute your mic. Hello? Who is against me in this class?
Nobody.
Are you sure? Are you sure? Class. So now understand what I just talk now. I don't use like 30 minutes. They speak in tongue. Ability at even the talk self. Yeah, now. Are we good? Class, are we good? We are good, right? So throughput accounting is an interesting. Okay, it's an interesting topic. Okay, so it's not going to give you guys a break. It's straightforward. Honestly, it's straightforward. Okay, now let's move. So I have a question here. Illustration 1. I think this is one of the icon pass question. Illustration 1. This question contains both it combines the theory of limiting factor as well as throughput. So you may face with that, right? I can decide to add both limiting factor and throughput accounting in the same question, and they may decide to add shadow price, right? They may decide to add what? Shadow price. So I can add, so you can prepare for that. They can decide to add limiting factor, throughput accounting, as well as how to determine the shadow price in one question, and even include the capital budget. You should not forget that in our previous class, we solved a question that include limiting factor, shadow price, and capital budget in one question. So it may be like that. So you get yourself prepared. It's just for you to read the requirement, then you apply the principle. The principle does not change, right? Anytime the question says that calculate what is it called? You want to do using the throughput accounting to determine the maximum output, right? Using the throughput accounting to determine the maximum output. You see, it is your sales minus your material cost. We give you what? We give you the throughput per unit. When you have throughput per unit, you have your throughput per limiting factor, or throughput per bottleneck. When you divide it, you have your throughput per bottleneck. Is that also? You have your throughput per. At the same time, you need to identify which one of these resources is the bottleneck. Is it material A or material B? By comparing the hours required to produce that unit and the available hours. The theory does not. The only thing that's changed under the throughput accounting is just the variable cost. That when you want to recognize the variable cost, the only variable cost you should recognize is only the material costs. That is the difference between the two. And the throughput accounting operates in a just-in-time environment, just-in-time system, meaning that we don't need to have material that should be available. We need to produce based on demand, based on customers' order. We don't need to make all the food and just leave it for waste. No, because they want to reduce what they want to maximize profit and reduce what and reduce costs. So we'll take a look at. Let's quickly look at this question. So I believe time will permit us to finish this question, so that in our next class we complete throughput accounting. So please, who will read the question? Class governor. Class governor. Wait, okay. Please, who will volunteer to read? Okay, Kingsley.
Sir, please, what here is the question?
Okay. A lady should read though. I beg. This is
What
that
here is the
sweet voice.
question, sir?
I don't even know. That sweet voice. So, and you understand now. So let's quickly check. Let's check. So the requirement quickly. We are starting from the requirement. Ladies should read. I beg. It's always let me not complete it. Okay, required.
Let the guys breathe. Oh.
Okay, required. Quickly.
Okay, sir. You are required to. Oh, sorry.
Go ahead.
You are required to calculate the monthly machine utilization rate for each product and explain which of the machine is the bottleneck/limiting factor.
Thank you. Hold on. Can you see? Calculate the monthly utilization rates. Class. The monthly utilization rate they say you should calculate is in your formula, which is 3. This is monthly utilization. The utilization rate is calculated as this, or I can decide to slash it as monthly utilization rates. I can slash it as what? I can say this is utilization rates. Hours required divided by hours available, right? Calculate the monthly machine utilization rates for each product and explain which of the machine is the bottlenecks. Of course, we should not forget how to determine which one of these is the bottleneck, right? Which one of these is the what? Is the bottleneck. We need to compare the hours required divided by the hours available, right? We need to calculate the monthly utilization rates. Then we will now do what? We will now explain which of these is the what? Is the bottleneck. So next class, this is clear, right? Okay. Now, the next requirement Quickly, please. Debbie.
Okay, sir. B, use current system of marginal costing and contribution analysis to calculate the maximizing profit output of the three products.
Thank you. Now, class, what is marginal costing? Use current system of marginal costing and contribution analysis to calculate the profit maximization monthly output of the three products. Class, what is the marginal costing approach? What is the marginal costing approach? Class. Hello. What is marginal costing, class?
How
do we determine?
When you
What did you say?
consider variable costs.
Less variable costs.
Now costing uses variable cost to value closing inventory.
And contribution analysis. Your limiting factor make use of the marginal costing techniques. Your limiting factor, because it is sales minus variable cost, is it not contribution? And what is marginal cost? Your marginal cost, for you to determine your marginal cost, let's forget about the valuation. It is sales minus variable cost, you have contribution. The theory of limiting factor make use of the marginal costing techniques, because your sales minus your variable cost is contribution. So when the question says use current system of marginal costing and contribution analysis to calculate, that is, they are telling you that you should use the theory of limiting factor that consider all direct costs as variable costs. That is your sales minus your variable costs. Next. So we need to do the output here and the profit. Debbie. Next.
Sorry, sir. C, explain why throughput accounting might provide more relevant information in high center circumstances.
Okay. Explain why throughput accounting might provide more relevant information in high centers circumstances. You can start to explain the theory of limiting, the theory of throughput accounting, because it is 6 marks. Explain why it is important. You start to mention you start to explain the meaning of throughput accounting, that throughput accounting will be relevant when the company makes use of the just-in-time system. Throughput accounting consider this. These are the things they just want you to talk about, what you understand under the theory, how it will be more relevant to this company. Next. Debbie, it seems you are busy, right?
Use a throughput approach to calculate the, sir. No, sir, I'm not busy. My network,
It seems you
my
are
network is
busy.
not great. Sorry, sir. This says use a throughput.
Okay, that's
No, sir, I'm not. Okay, D. Use
go
a
ahead.
throughput approach to calculate. Use a throughput approach to calculate the throughput maximizing monthly output of the three products.
You can see when the question wants you to use throughput, it will be stated, it will be clearly stated that use throughput approach. And when the question wants you to use limiting factor, they will not tell you that use limiting factor. They will say use the marginal costing. And you should know that you are using the marginal costing and contribution analysis. The first one is telling you that you should use limiting factor, because limiting factor make use of marginal costing because it consider variable costs. Now, when the question wants you to use throughput accounting, it now states that use the throughput approach to calculate the throughput maximizing monthly output of the 3 products. Use throughput, monthly output. When you do the output, you can decide to do the profits. This is 6 marks. All right. Then explain the throughput accounting approach to optimizing the level of inventory and its valuation. You have to go back to the notes where throughput accounting is compared with the marginal costing. In valuation of inventory, throughput accounting, you don't even disregard it, anything that has to do with valuation of inventory, because it operates in a just-in-time system. I will send the notes tonight. You have to go through the notes on the throughput accounting. You go back to the video, the recording is on YouTube already. Go back to the recording, watch it, read the notes. Then all this explanation, you should be able to write something down. Right? You don't need to cram, just understand it. What does the theory says? You move on. So, suggested solution. Oh, we need to read the question proper. Okay. Let's start. Okay. Debbie. I think your network is...
Yes, sir. I'm here, sir.
The question, quickly.
iSense Limited makes 3 products. Sir, can you hear me?
Yes, I can hear you now.
Okay. iCenter Limited makes 3 products: soy, Miko, and yogurt. All the 3 products must be offered for each month in order to provide a complete market service. 3 products are fragile and 3 quality.
Deteriorate rapidly shortly after
My
production.
my network is not. I can't see the screen again.
Okay. That's fine. Just mute. Don't worry. Just mute. Thank you.
I'll read it.
Okay, I'm coming. Let me explain this part. Now, can you see that this is the 3 products they produce? All the 3 products must be offered for sale each month in order to provide a complete market service. The products are fragile and their quality deteriorates rapidly shortly after production, meaning that they are telling you that you should not produce this product when it is not needed. Class, you should not do what? Because the products are fragile and it can be deteriorated. It will lead to waste of time, waste of resources, and fund. Class, that is the reason why the last question the E part of that question now say, okay, explain throughput accounting, how it relates to iCenter. Right? Meaning that the products that iCenter sell, they are fragile and their quality deteriorates if shortly after production, if they don't sell it immediately, their quality deteriorates. And that is the reason why they have to adopt the throughput accounting system, because it is just in time. It is only when you need it will give you, because of the nature of their products. Class. Bashirat.
The products are produced on two types of machine and worked on by a single grade of direct labor. 50 direct employees are paid 80 naira per hour for a guaranteed minimum of 160 hours per month.
Thank you. Now, we have to prove this. The products are produced. The products are produced on two types of machine and work on by a single grade of direct labor, meaning that it is on a machine, two types of machine, and it is based on what? Labor class. Now, 50 direct employees are paid 80 naira per hour for a minimum guarantee of 160 per month. Now, this is how it works, class. This is how it works. They said 50. That is why throughput accounting is very, very correct. Very, very correct. You have 50 employees. We will pay them 80 naira per hour with the minimum guarantee of 160 hour per, meaning that you must work minimum, you must work because we are paying you 80 naira per hour, but work 160 minimum. But the question is, how many hours did they even work? Is it up to 160? Just like in a private sector, whereby there's numbers of hours you need to work in a day. That is when Deborah will say that, look at this guy dressing. So they just dress like this thing. Emmanuel will now see that, look at your tie. Who again? Bashirat. They will start gossip. Sorry. And they will not use the numbers of hours they're supposed to use. They will not use it. And at the end of the month, you will receive some. And you are telling me that labor is a variable cost, but it's supposed to vary based on what you produce, based on what you work. And that is why throughput accounting says that no, we have to take labor as other conversion costs. Class, are we still together? Are we still together?
Yes, sir.
Okay. Next.
All the products are first pasteurized on a machine type A and then finished and sealed on a machine type B. The machine
Okay.
requirements for each of the products are as follows. We have machine A and machine B.
You can see now in this question now, the hours required, the hours per unit is given to us as per unit. Per unit. You just need to match it with the units. Don't forget that in some cases, under the theory of limiting factor, there's one question we solved where the hours per unit is not given to us, where we now use the cost, the unit cost divided by the labor hours, the hourly rates, that give us the hours per unit. So please take note of that. Now, in this question, you are given the hours per unit. Then we need to test which of, because they use two machines. Which of this machine is the bottleneck? We need to compare compare the required. What we take them to produce the units and the available. Class. Bashirat.
The machine requirements for each of the products are as follows. We
The
have
capacity.
products, soy, milk, and yogurts. The capacity of the available machine type A and B are 6,000 hours and 5,000 hours per month, respectively.
Thank you.
Details.
Thank you. Can you see? Just hold on. Thank you. Can you see the capacity of the available? They've given you the available hours for each of this machine. Then you need to compare your available and the required. Then you will not check which one of these machine is the bottleneck. Okay, go ahead.
Class.
Details of the selling price, unit cost, and monthly demand for the three products are as follows. We have soy,
Thank you. Thank you.
naira per unit, milko, and yogurts. We have the selling
Thank you.
price, concentrate cost, other direct costs, direct labor costs, overhead profits, and
That's fine.
maximum monthly demand. All figures are assumed to be correct.
Okay, thank you. Can you see if the available hours is given? Now we need to determine the required hours. Monthly demand is this 1,200 units. How many hours will it take them to produce 1,000 units, 1,200 units? This is 700 units. How many hours will it take them to produce 700 units of Miko? This is 600 units. How many hours will it take them to produce 600 units? Then you cannot compare with your available. Then you check which one of these machine is the bottleneck. Although Icenter Limited uses marginal costing and contribution analysis as the basis for its decision-making activities, profits are reported in the monthly management accounting using the absorption costing basis. They are telling us that what they use is the marginal costing and contribution analysis as the basis for its decision-making activities. Then they will now report profits on the basis of absorption in the monthly management meeting. But what they use is marginal costing and contribution analysis. And we could see that in what they give us, that they have selling price, they have this. You can see the way they present it. They use what? They use the marginal costing and contribution analysis. When you have marginal costing, right, is the theory of limiting factor, because theory of limiting factor still use marginal costing, which is sales minus all your variable costs. And that is the reason why the question says that the first one, the third question, use the current system of marginal costing and contribution analysis to calculate the profit. How do we determine the output? This question did not say you should use throughput now. Does it? Is it stated that you should use throughput? Then the question is, what is the marginal costing and contribution analysis approach? This limiting factor. Your contribution per limiting factor, you rank and you move from there. Then you calculate your what? Your output. Class. The first requirement: calculate the monthly machine utilization rate for each product and explain which of the machine is bottleneck. Before you can be able to explain, you have to calculate, you have to check which of the machine is the bottleneck. Is it machine A or the machine B? Then if you want to determine the machine utilization rate, you can use this first formula, which is the utilization rate. You can use the hours required. Hours required divided by the hours available. We give you the machine utilization rate. So we can go back and check Suggested solution. Suggested solution. Suggested solution. What is the name of company? iCenter. A. So let's check which of the, let's first of all check which of these is the limiting factor. Is the bottleneck, sorry. Explain which of the machine is the bottleneck. Let's explain. Let's check by comparing the required, and you compare the required and what class?
Available hours.
You compare the required and available class. So we have the first product is what? What is the first product? Okay, you don't have the question.
Soy, milk, and
Okay. So can you see it? Soy, Miko, yogurt. So soy, what happened there? Miko, and yogurt. Right? What's happening here? Why is this thing is okay? Okay. So class, we need to determine which of the machine is what is the bottleneck. Please pay attention. We start with the first machine, machine A. Machine A. So how many hours will it required to produce 1 unit of soy? How many units will it require to produce 1 unit of soy, class?
1.5 per hour per hour. 1.5 hour per unit.
1.5 hours per unit. It will take them 1.5 hours per unit to produce 1 unit of soy. And how many units did they want to produce of soy? How many units did they want to produce?
1,200.
1,200 units.
100 units.
So we can have 1.5 hours. Please mute your mic. Hours per unit times 1,200 units. For the first one, while we check for Miko, 4.5 hours per unit. They will use 4.5 hours to produce 1 unit. The question is, how many units did they want to produce of Miko? How many units did they want to produce for Miko?
700.
700 units.
700 units. So we can have 4.5 hours per unit times 700 units. So the next one is, how many hours did they want to use to produce? They will use 500. Is that not so? They will use 3.3 hours per unit to produce 1 unit. How many units did they want to produce? 600.
600 units.
So I can have here 3 hours per unit times 600 units. right? So please multiply this. The first one, what do you have?
1,800 hours.
1,800 hours. What do we have here?
3,150 hours.
3,150 hours. What do we have here?
1,800 hours.
1,800 hours. So if you add it, what is the total required? If you add it, what do you have?
6,750 hours.
6,750 hours. We need to compare with available. What is the available? Let's check. Available as the capacity of the available machine A, machine type A and B are 6,000 hours for A, while 5,000 hours for B. Class. I know some of you will go and multiply because you see per month. Don't set question for yourself when all information is not given to you in months. They just tell you that this is what they have per month. Don't go and multiply anything by 12. Oh. You want to set question for yourself. Now, 6,000 hours. 6,000 hours. So, do we have bottleneck here?
Yes, sir. 750 bottleneck, shortfall.
So, we have 750. Just hold on. 750. 750 hours. What it will take them to produce 6,000. What will take them to produce 1,200 units, 700 units, and 600 units of the three products is 6,750. But the company only have the capacity for 6,000 hours. Definitely there will be a bottleneck, meaning that they will not be able to produce all the old units of, you can call it shortfall or a binding, call it a binding constraint or bottleneck. There is a bottleneck here because we are in the theory of throughput accounting. So we need to test for machine A, machine B. Class. Don't forget, when you have one limiting factor, depends on the question, you can either use the contribution per limiting factor or you use throughput accounting. But when you have more than one limiting factor, you use what? Class. When you have more than one limiting factor, you use what?
Linear program.
Linear program.
Linear programming. Thank you. So let's quickly test. We already know that now let's calculate the machine utilization rates, because the question says determine the machine utilization rates. Machine utilization rates for A, machine utilization rates. Machine utilization rates is equals to hours required or total hours required divided by available hours. Right? So total hours required is 6,750 hours divided by available hours of 6,000 hours. What do we have? What is the rate? What is the percentage times 100? What do we have?
1.125.
Multiply
That's
by 100.
112.5. 112.5.
Okay. 112.5%. That is the utilization rate. You can see that its increase is kind of high. That is why you have it to be bottleneck. But let's quickly a minute, please. Okay, we need to continue. So let's quickly test for this. I can copy this here. Machine B. You need to complete your testing. Right. 1.0 hours per unit times 1,200 units. 2.5 hours per unit times 700 units. 2.0 hours per unit times 600 units. Times 600 units times 600 units. Okay. Please give me a figure. What do we have here?
1,200 hours.
1,200 hours. What do we have here?
1,750 hours.
1,750 hours.
The last one, 1,200 hours.
1,200 hours. So we can have total required
4,150 hours.
1,150 hours.
4,150. 4,000 total.
Okay, 4,150
150 hours.
hours.
Yes, sir.
So what is the available resources?
5,000 hours. 5,000 hours.
5,000 hours. Let's check. 5,000 hours. I'll send the notes. I will update the drive immediately after the class. 5,000 hours. So we can have 5,000 hours. There is no short for here, right? Is that not so?
Yes,
Yes,
sir.
Yes,
sir.
sir.
No,
Yes, sir.
no shortfall. So what is the difference?
850 hours.
850 hours. 850 hours. So the question, let's go back to the question. Okay, let's determine the machine utilization hours, my machine utilization rate. Now, I may decide to change the name. Should in case I may decide to do what? Change the name to bottleneck resources efficiency or resources efficiency, whichever one. So you should know that they are still saying the same thing as utilization rates. Please take notes. So let's quickly calculate the utilization rates. Machine utilization rates equals to what is the total required hours? What is the total required hours?
4,150.
4,150 hours divided by available hours. What do we have?
That's 830.
What is the percentage, please?
83%.
83%. Can you see which one of this machine utilization, which one of this is higher? Which one is
Machine A.
machine A? You can see. You can also base your decision based on that, right? They say you should explain. Is that not so? Therefore, machine A is the bottleneck, right? So we move to the next one. We already know that this is the bottleneck, right? So we move to the next requirement. So what is the next requirement? B, use current system of marginal costing and contribution analysis to calculate the throughput, maximizing monthly outputs, to calculate the profits that will maximize the output. You know, you have to determine the output before the profit. So which approach are we going to use to determine the output? How do we get it? Class, which approach?
We use the limiting factor approach. By looking for our contribution per unit first. As our
Thank you. Contribution per limiting factor, right? So please take note of these things. There's no how you will determine your output. This is marginal costing, right? The throughput accounting make use of the marginal costing techniques because you have your sales. It considers the sales and all the variable costs. And that is why they say you should use contribution analysis. Right? So B B okay. So what is the B part of this question? We need to determine the contribution per limiting factor. So we can say determination of contribution per limiting factor. Can you see that in throughput accounting, question may demand you to, from the requirements, the requirements may include limiting factor. So please prepare for that. Don't get confused when they say marginal costing, using the marginal costing to do the output. You should not be confused about that. How will you determine the output? Is contribution. Your contribution per limiting factor, your contribution per unit, then contribution per limiting factor, your rank, then you move on. We already know our limiting factor. We already know our bottleneck, right? We already know our what? Our bottleneck class. So we pick it one after the other. Let me go to the table. All right, I can copy this. Copy. So selling price. This is, I can say, oh, okay. Let's variable costs. Less variable costs. So can remove this. Right. Class. So if you remove this, what is our contribution per unit? Class. What is contribution per unit? Quickly. What do we have? Am I the only one in this?
400.
Hello, am I the only one?
400.
Okay,
400.
400. What do we have here?
$960.
960. What do we have here?
740.
740. Right. So the limiting factor per hour, which is machine, right? Machine A. What is the limiting factor per hour? What is the hours per unit for machine A? For SOE, what do you have?
1.5.
1.5.
1.5, not 1.5, 1.5 hours per unit.
Units, yes.
Class. 1.5 hours per unit. So what is the hours per unit of machine of Miko?
4.5 hours per unit.
4.5 hours per unit. What do we have for yogurt? 3 hours per unit. 3 hours per unit. So what is contribution? Contribution
per hour.
the limiting factor. What do we have? What is our figure?
266.67. 266.67.
Is that what are we right?
Yes, sir. 266.67.
What is contribution per limiting factor?
266 hours.
267 hours.
So when you divide this by this, you have 267 hours.
When you divide that, you divide that
Per
400
unit,
hours
per unit, per unit.
per unit. No, it's not per unit.
No, it's not per unit now. We have contribution 400 per unit, and we have 1.5 hours per unit.
This 400 now is 400 what? Is it not 400 naira?
It's
Naira
400
per
naira,
unit.
sir. 400 naira per unit.
400
So when you
naira per
divide,
unit.
1.5 hours per unit, what do we have?
266.6 naira per hour.
Thank you.
266 hours.
We have
Thank
we have
you.
206 naira.
No, it's okay. Someone just said it now. I think it's Abiola, right?
Yes, I said 266.6 naira per hour.
Okay, 266 point what?
0.6 naira per hour.
266.6 naira per hour. Thank you.
No, it's
We
wrong.
did the same thing. We did the same thing
It's wrong, sir.
under whether it is wrong or not. I will take it like that. Whether the figure is wrong or is not or is right,
It's
right?
correct.
I will just take it like that.
Correct.
We did the same thing. We solve how many questions under the limiting factor? When you have 400 naira divided by 400 naira per unit divided by this. Please, figure, please.
213.33 naira per hour.
200 and what?
213.33 naira.
213. Let's just round it up, please. This will give us 27 per hour. So what do we have here? 213.
Yes, 213 naira per hour.
213 naira per hour. What do we have here?
247 naira per hour.
247 naira per hour. When we still solve question again, someone will still tell me it is per unit. And that is the problem. And if you think performance management is copy and paste, it is not. You have to understand there are some things you need to understand in performance management. Once you don't understand it, you will lose mark. We did it in the first class, in the second class under the limiting factor, in the third class under the limiting factor. And someone is still telling me that you will have 267 hours, just 267 hours. So we have to rank. Right? We have to ranking. So which one will come first? Based on this?
The first one, that is soy.
Soy first.
So we have first, second,
Yogurt.
then we have third.
Milk.
Third.
So the next step is to do the production output. Production is to do the allocation. Let's do allocation. Please, can you mute your mic? Who is that now? Allocation. So available resources. What is available? Don't forget that we have to focus on the one of limiting factor, the one of the bottleneck, right? Which is machine A. Why we have bottleneck here? Because we don't have the capacity to produce all these units. We have to allocate. So the available hours is 6,000. We are going to allocate this 6,000 hours to the 3 products. Available 6,000 hours. So we have to do allocation. Which of the product are we allocating for first?
Soy.
Which of the soy? How many hours will it take us to produce the unit of soy? How many hours will it take us to produce the unit of soy, class?
1.5. Sorry.
1,100 hours.
1,800 hours. I said, how many hours will it take them to produce the unit of soy? Is 1,800 hours. I did not say, okay, how many hours will it take them for 1 unit? Do you get, Baseras?
Yes, sir.
So 1,800 hours to produce how many units? To produce how many units?
1,200.
1,200. So when you allocate, what is the available?
4,200 hours.
4,200 hours. Allocation. We have to allocate to which of these products?
Yogurt.
Yogurt. To yogurt. So how many hours will it take us to produce the unit of yogurt? How many hours?
1,800 hours.
1,800 hours. The question is, how many hours do we have? Okay, we have 4,200. Okay, we can still use it. Oh, we can still use it, right? We can still use it.
Yes.
Excuse me. 1,800 hours. So how many units will they use this to produce? How many units of
600.
600? In case you don't know where they are picking it, you can see 600 units. I will share the notes immediately after the class to the drive. So, what is the available?
2,400 hours.
2,000. 2,400 hours. $2,400. So we have allocation to the last person, which is Miko. The question is, how many hours are we going to use? Miko will use 3,150 hours. But we don't have the capacity to do that. Right? Because 3,150 hours will produce 700 units. But the company did not have the capacity. They only have the capacity for 2,400 hours. So therefore, we are making use of their capacity. They can't do past themselves now. So we move. So how many units will this one produce? 2,400 hours divided by what?
Divided by 3. 800 units.
4.5.
Divided by
That's like
3
4.5
hours
hours.
per unit.
Hours.
5.5.
Divided by hours per unit. That is 4.5 hours per unit. Right? 4.5 hours per unit. Hours can cancel hours. What do we have here?
533 units.
533 units. That is the capacity we have. We don't have the capacity to produce the whole 700 units. So therefore, the production plan or the production output so the first one is soy. Soy will have
1,200 units.
1,200 units. The second one is Miko.
Milk, 533 units.
Thank you. 533 units. The third
Yogurt,
one is
600
yogurt
units.
is 600 units. So we need to do the production. We need to do the profit statements. Can see in one question, right? We need to do the profit statement. I will just copy the contribution per unit and multiply. Right. Okay. The first one is soy, milk, and yogurt. Can put my Naira sign, please. Presentation. You can see the way I'm presenting my work, right? So contribution, pick it from the contribution. You don't need to start from the sales. What is contribution per unit for soy? Let's go back and check. What is contribution per unit?
400.
400.
400 units, not 400 Naira per unit. So that's 400 Naira per unit. You will know that, yes, you are multiplying by the unit. 400 Naira per unit. Multiply by the unit here, 1,200.
1,200 units.
What do we have?
480,000.
480,000. Next. What is the contribution per unit? 960 naira per unit. £960 per unit times Miko will produce 533 units. What do we have?
511,680 units.
Is it unit or in naira?
Naira.
Sorry, naira.
5 what? 11
511,680 naira.
680. What is the contribution per unit?
740 naira
740 naira per unit.
per unit multiplied by 600 units.
The 600 units. What do we have?
4,000.
Okay. So what is the overhead cost given to us in this question? Let's go back to the question. Overhead. You can see that the overhead cost is in units. That is why they say soy naira. This is per, can you see it? Per unit. This is 240 naira per unit. This is 620 naira per unit. And this is 520 naira per unit. So overhead. Overhead. Please don't go and put the 240 naira here. Oh. It is per unit. Oh. And this is total. So the first one is 240 naira per unit, right?
Yes.
Times, what are we going to use to multiply it?
1,200 units.
1,200. Are you using the budgeted or you are using the production output? Which one are you using?
The production output.
Why will you use the production? Does overhead varies with production output?
We are using the budgeted one.
Mr. Moses, does overhead varies with the production output?
Apologies, sir.
Fixed overhead does not vary with the output. You use the initial budgeted given to us in the question.
Noted, sir.
So we go back and check overhead. Okay, is 120. 1,200 units. 1,200 units. What do we have? Class, what do we have?
288,000. 288,000. So coincidentally.
88,000. So what is the overhead cost per unit?
620 naira per unit.
620, thank you. Just give me a figure like that. So 620 times 700, right? 620 times 700 units. What do we have?
434,000.
434,000 naira. What is the last one?
520 naira per unit.
520 naira per unit times, what is the budgeted unit?
600 units.
600 units. What do we have?
312 naira. 312,000 naira.
12,000. What is the profit?
192,000 for soy.
Coming. The profits. Where is this one? Where is this one coming from? The profits. One what?
192,000.
192,000. What do we have
For
here?
you got 132,000.
132,000. What do we have here?
77,680.
77,680. So we are done with the B part of this question. So we proceed to the C. Class. What is the C part of this question? Explain why throughput accounting might provide more relevant information in high-center circumstances. Class, who can explain that for us in just seconds? Why throughput accounting might provide more relevant information in high-center circumstances. Okay. Mr. Moses.
Yes, sir. I think based on your explanation, it will provide more relevant information because it is based on just in time analysis. So that's one. Then it does not give room for wastages. It is at the production is made as at when needed. Then
Okay.
it's safe.
Okay, thank you. You've said it all. Throughput accounting will be more relevant to high centers because they have a fragile product. I like the way you quote me, right? It makes sense. The products are fragile. You should as well relate it to what they are doing. Throughput accounting will be relevant in Icenter Limited because they operate in a just-in-time system. Throughput accounting considers only variable costs. Throughput accounting only material cost as variable cost. So therefore, this will be useful in iCenter Limited, right? Throughput accounting converts their card sales, their material to what? To a card sales. This can be relevant in the case of iCenter Limited because they produce a fragile, they have a fragile what? Fragile product. And that is 6 marks. So we can move. Now, the E part of the question, before we go, use throughput approach to calculate the throughput maximizing monthly outputs, right? Monthly output of the 3 products using the throughput approach class. This is where you will now use your sales minus material costs. So therefore, we can create the table, can go back to the table D. This is C. Can have D here. So I can copy the table because we want to use throughput accounting, selling price minus material costs, we give throughput per unit. That is the only variable costs under the throughput accounting is material costs. All other costs are treated as a conversion costs class. So therefore, we can have it here, determination of throughput per bottleneck, just like we did limiting factor. Throughput contribution per limiting factor. We already know the bottleneck. Class, this is your selling price minus your material. Your concentrate cost is a mixed cost, is a material. Class, the concentrate cost here is what is a material. This question is a trap, like they use it to, it's like they don't want you to have the whole score, right? The whole marks in this section. That is why they added concentrate cost. And don't forget that where you will know that this concentrate cost is material, right? Is material is when they have here, they say other direct material. Definitely they would have a material before other direct material. So this is to tell you that the concentrate is what? The concentrate cost is a material cost, and that is why you have other material. For them to have other material, definitely they would have what? Material costs class. So when you subtract this, what is throughput per unit?
460.
460 per unit.
460. What do we have here?
1,440 per unit.
1,000 what?
440 per unit.
440 per unit. What do we have here?
1,100 per unit.
1,100 naira.
100 naira per unit.
1,100 naira per unit. And that is why you see the unit up, naira per unit. Yes. No. Okay. Throughput per unit. After the throughput per unit, you have the bottleneck. The bottleneck per hour, which is mentioned A. So what is the hours per unit? Class, don't forget that the bottleneck may be material, maybe labor, maybe machine. This question is even machine, right? We'll solve a question under the limiting factor where we have material to be a limiting factor. So what is the hours per unit? The hours per unit is this, right? The hours per unit is this for each of the bottleneck. I just copy it, right? Class, are we still together?
Yes, sir.
Class, are we? So what is throughput? Throughput per bottleneck. What is throughput per bottleneck?
307 for soy.
Mr. Moses.
307 hours per unit.
Mr. Moses, you can mute your mic. What is our throughput per bottleneck, class?
307 naira per hour.
307
Naira per hour.
per hour. Mr. Moses. What do we have here?
320 naira per hour.
320 naira per hour. What do we have here?
367 per hour.
367 naira per hour.
367 naira per hour.
368. Okay, sorry, 367. Yes, 367 naira per hour.
Now, you need to master this. Mr. Moses, the 460 naira per unit divided by the hours per unit. Unit cancel unit. You are left with never an hour. So, what next? We have to do what? We have to rank. Which one come first? This is first.
You got first. Milk
Second.
second. Soy third.
Third. Then we have third. So we need to do our allocation. Allocation. We still have available, what is available hours for the machine? A, just like the way we did the first one. What is our available hours? 6,000 hours, right? 6,000 hours. Am I the only one in this class?
You are correct, sir.
Allocation. Allocation. Who are we allocating for first? We are allocating to
You got first.
So how many hours will it take yogurts to produce all the units? How many hours will it take yogurts to produce all the units? How many hours?
1,800.
1,800 hours.
1,800 hours. 1,800 hours. So how many units are they going to use this to produce? How many units are they going to use? 1,800.
600
units.
600.
600 units. 600 what? 600 units. Available
4,200 hours.
4,200 hours. Allocation. Which one are we allocating to? Which of the products?
Miko.
Miko. So how many hours are we allocating to Miko to produce the unit?
3,150 hours.
3,150 hours. 3,150 hours. How many units are they going to use this to produce?
700 units.
700 units. So what is the available?
1,050 hours.
1,000 what?
1,050 hours.
1,050. So how many hours will it take Soyi to produce the unit? To produce 1,200 units. How many hours?
1,800 hours.
But we don't have such capacity, right? The only
Yes, sir.
capacity that the company have is to just allocate this to Soyi. So how many units are they going to use this to produce? 1,050.
100 units.
1,050 hours divided by what is the hours per unit of Soyi?
1.5 hours per unit.
1.5 hours per unit.
700 units.
700 units. What? 700 units. So we have
The production mix.
thank you. Production mix or production output or ultimate production, as the case may be. So we have
Half
Soyi,
soy, 700 units.
700 units.
Milko,
Milko,
700 units.
700. 700 units.
Yogurt,
Yogurt,
600 units.
600 units. Right. Okay. Oh. We need to move. I'm on a hunger. No, no use that word on women. I got that word on will not work. It's hunger. Please let me
Pastor,
finish
the Lord
this.
will feed you.
What did you say? Debbie.
We will feed you after the class.
Okay. So we have to do the profit statement. Profit statement. Right. So let's just start from the contribution or the throughput per unit, Abby. Okay. No, let me just use it like this to work. Or I will just copy this. Okay, I'll just copy this. Though we have some other costs that will come up. But the question did not say profit statement. So the question just say output. But let's do it. Right? Question says what? Output. Let's do it for some reasons. So what is the throughput? Throughput. What is the throughput per unit? What is the throughput per unit? 460, right?
460. 460 naira per unit.
460. So the production plan for soy is 700 units. So what do we have?
322,000 naira.
320. So what is the throughput per unit from eco? 1,000. What did you say?
322,000 naira.
No. This is 320 now.
322, sir.
Okay. Oh,
322.
away. It is well.
Oh God, all is setting true, sir.
I mean, I'm even tired. Plus tiredness. Imagine you go to work and still come back and for how many hours class now?
Well done.
Thank you. So the next one is throughput, right? Milko throughput 1,000, 1,440, 1,440. So what is the unit?
700 units.
When you multiply, what do you have?
1,008,000 naira.
1,008,000. What is the throughput per unit for?
It is actually an 8 naira, not an 8 naira.
8,000 and an 8,000.
Okay, 8,000.
Yes.
One million
1,008 and 8.
Okay, 008.
Yes, sir.
Okay, that's fine. Thank you.
Yes.
So, what is the throughput per unit? 1,001, right? 1,100 times the 600. What do we have?
660,000.
660.
Then you less conversion costs. Conversion costs. Don't forget that we're given labor, direct labor there. Is that not so? Don't forget that all other costs, we charge all other costs here as a conversion what? As a conversion costs, right? As a conversion cost. In your determination of throughput, you use throughput per unit, you use material. Don't forget that in the question we have direct labor. In the question we have what? Direct labor. You charge direct labor. To where? You charge direct labor to conversion costs. Right? So therefore, you give me this figure per unit of direct what? Of direct labor. So, okay. Where are we? Direct labor. Give me the costs per unit. Direct labor. The first one is what?
16 naira per hour.
No, is per unit now. The cost.
Per unit.
6 naira per unit.
16 naira per unit times 16 naira per unit times what, class?
The budgeted cost.
Why? Why budgeted?
Because it's a conversion cost, like a fixed cost.
Yeah.
No, we are
Because
using Abi, because we are using just in time, using the production cost.
I'm listening, please. Okay,
I'll
Debbie.
go with
No,
I will go with the like the budgeted units, the budgeted production units, because he said the throughput, you know, only material cost is the variable cost.
Emmy.
Yes.
Only material cost is the variable cost in determination of throughput. Only material cost is a variable cost in the determination of throughput. Your variable overhead, your direct labor are conversion costs. Does not mean that they are not a variable costs. They are variable costs, but you will not charge it in the determination of throughput. Do we get that? They are your variable production, your direct labor is a variable cost, but in determination of throughput, it will not be included in the determination of throughput. Class, in the determination of throughput, it will not be what? It will not be included in the what? In the determination of what? In the determination of throughput. But we can write it off as what? As a conversion what? As a conversion cost. Emmy, did you get that?
Yes, I do. Thank you.
Okay. Class, can we move?
Yes, sir.
Okay. So we multiply by what? What are we multiplying? We
Like
multiply by
700 units.
700 units.
700 units
Yes, for soy.
Sir, sorry,
for
please,
soy.
that profit is not correct.
I know now, I know. We know now. We'll adjust everything. I know we are not done with it now. We still adjust everything.
Okay, sir.
Yeah. Okay. So we can have 700. What do we have here?
42,000 naira.
42,000 naira. What is direct labor cost per unit? Cost per unit, so Miko class.
80. 480. 180 naira.
480, please look at it. 480.
480 naira per unit.
480. 480. $480 times 700. This question was tested which year?
2016.
Okay, 2016. So what do we have here?
336,000 naira.
Three. 336,000. So what is the direct labor cost per unit?
360.
3 what?
360
naira per unit.
Naira per unit.
360 times 600 units. What do we have?
216,000.
200 and what? 16, right?
Yes, 216,000.
216,000 naira. Our overhead costs will remain the same. So therefore, what will be the profits?
So excuse me, sir. So we are charging our overhead cost on the budgeted.
Yeah, it's overhead is budgeted. Overhead does not vary now. Is overhead varies?
It's fixed.
Fixed.
Yeah. Any other question? What do we have quickly? What do we have here?
8,000 naira. 8,000 naira.
8,000 naira.
Negative or positive?
Positive.
8,000 naira. So what do we have here?
Sir, the 8,000
What do we have?
So for two is negative 8,000.
It's negative 8,000.
Yes.
So what do we have here?
238,000.
Two words.
For Miko, sir.
Okay, I'm coming. So just hold on. Let me arrange this thing, please. Sorry. So what do we have here?
For Milko is 238,000.
238,000.
238,000. What do we have here?
132,000.
132.
132.
Yes.
Okay. We have 132,000. Class. Are we on the same page? Who is against me in this class? Who is against me in this class? Okay, lastly, the question did not say we should do the profit. I just did it, right? So, what else? Okay, so it is what it is, class. We should not forget this. All right. So, what do I have? Explain the throughput approach. All right. Explain the throughput approach to optimizing the level of inventory and its valuation. Contrast this to the current system employed by iCenter. Don't forget that iCenter uses a marginal costing approach. Is that not so? They use a marginal costing approach. So you can contrast this by explaining the basis of valuation and marginal costing basis. They are used to valuation. Is that not so? It's considered the valuation of inventory. Under the throughput accounting, valuation is zero. So when I send the notes to you, you can check and contrast that the E part of this question. You can see in this question now, it includes both the theory of limiting factor and the throughput accounting. Please understand the process. Then the only thing this question did not test is throughput accounting ratio. Now, our next class on Sunday, we'll start our class on Sunday at maybe 2 p.m., right? 2 p.m. class.
Yes, sir. That's the time we
Yes, sir.
agree.
Yes, sir.
Okay, 2 p.m. So we'll start on Sunday at 2 p.m. so that we can be able to solve the question that include the throughput accounting ratio. Then we are done with throughput accounting. It's just for you to solve question. There's one question in the material too. Solve it. It's one of the past question. Check question on throughput accounting. Solve it. Don't copy what is in. Don't do copy and paste. The way it is in Pathfinder. Do it. Understand it. This is how you understand it. Present it very well. Right? You still arrive at the same word, at the same answer. So please, do we have anyone that have question for me before we go, please? I won't go. I don't go. Bashirat, I beg.
Samu can join you.
Sir, the last question we solved on limiting factors, Abi, was it on limiting factors? That we have
Go and
a
use, I saw it. Go and use
yes,
3 years. Yes, go and use
yes,
3
I
years.
used, and we have a positive MPV. So what's next are we supposed to do?
Internal rate of return now. Do internal rate of return.
Okay. After that, that's all.
Yes.
Okay.
And you advise them. That's it.
Okay.
Class, we don't see that question though. In that last question, they wrote 3 years. Well, but we're busy looking for 3 years. Wait, let me show it. Let me share my screen again. I think it was there, but we didn't see it.
Yes, it was there. It was stated clearly.
Yeah. Let me share my screen again. Limiting factor. Limiting factor.
I think illustration 2.
Yes, illustration. Is it 2 or 3, self? Okay, biggies and smallies. Illustration 2, okay. So it was stated that it is 3 for 3 years. Class, can you see it? Assuming the company position maintained for 3 years. But we're busy looking for 3 years.
No, we're looking for 2 years. We were looking 2 years last year. We did 2 years. And I
We
think
did
Yes.
2 years. So
Yes, but the
and
question,
it was stated.
but the question gave us 3 years.
the
Yeah, 3
question,
years.
there's
So,
no space. I think the way it was typed. So
yes, exactly. The way it was
there's
done.
no space bar. So that is
Yeah.
just what it was. I'm just seeing it for the first time. Wait, 3 years. No, so we're
Okay,
saying forthcoming years, forthcoming.
yeah.
Yes.
So if you have, just change it, just do your annuity for 3 years, you have positive MPV, do your internal rate of return, positive and negative. Then that's it. That's what they say you should do there. Thank you. Mr. Moses.
Yes, sir. Thank you very much, sir, for the lecture. God bless you. My question, the first, when we determined the bottleneck initially, the first calculation we did, we already gotten our bottleneck. My question is that, do we need, once, since it's two machine, we have machine A and B, and the first calculation, we have already gotten our bottleneck, do we actually need to go ahead for calculation of the second one again?
You have to do it. Okay.
Further information.
Do it.
Okay. Thank you very much. Then the other is an opinion. I don't know. Sorry for bothering you. We really appreciate your efforts, sir. Yeah, there is holiday tomorrow. I don't know if there's any, if it is possible.
Hey, that's true. Thank you. Thank you. I say your head did there, double double.
Thank you very much, sir. God bless you.
Yeah, your head did there. Thank you. So that we can make use of the holiday, right? Makes sense. Yes. That's true. That's true. So I will send a message tonight. Please just make sure you are active. Please, I beg you, just make sure you are active. I will send a message tonight that we may have our class early. Maybe 10, maybe 10 or 12, maybe 10, sha. So please just make sure you are active.
Sir,
I will discuss with Christy. So then she will communicate the time. So please don't make sure. Thank you, Mr. Moses, for that. Thank you so much. I appreciate it.
You are welcome, sir.
Yeah. Read one.
Okay, yeah, thank you so much. What I just want to ask is that you made mention of the fact that you will upload the notes in the drive. I just want to make a request for the link to the drive, or if I thought it has been shared before.
Have you paid? Have you paid for the material? If you pay for
I'm yet to
material,
pay.
okay. If you
Okay,
pay for material, you will get the link. Just pay for your material. I will send the details to the platform. Just pay for the material. Send your evidence of payment to Christy, right? She's in
okay,
charge. She will share you the material.
okay,
Yeah.
okay. That is noted. Thanks.
Yeah. Thanks. You're welcome. Uh, Ayodele.
thank you so much, sir. Sir, as regards tomorrow, sir, I don't know. It's not. I know it's for our own good too, but I'm not sure it's everybody that will chance around that time. I don't know. I know it's for our good, sir, but I
Okay.
don't know if.
Since I don't know, say holiday day tomorrow. I don't know. I will talk to. I will discuss with Christy.
Okay, sir.
So I have to fix the time that will be convenient for me. I'm sorry.
Okay,
Ayodele. I'm sorry about that, please.
no problem.
Thank you. Yeah, thank you. Thank you. Bashirat.
Yes, sir, please. Are you sending this material tonight?
Yes, I will do that, please. No.
Please kindly include this solution inside the material.
Why? Why?
I didn't write anything. I'm
You
just
write it.
following through.
You write it on YouTube. Don't worry, you will see it there. You see it there. But you just have to
Okay,
go
sir.
back again. You have to go back again and do the
Yes,
revision.
yes, I know. Thank you, sir.
Yeah, welcome. No problem. You get it now. You get it now. Any other question, please? So, thank you so much, everyone, for joining. In our next class, which is tomorrow, by God's grace, we're looking at throughput accounting in accounting ratio, where we have throughput accounting ratio. From throughput accounting ratio, we need to move to relevant costing, right? From relevant costing to make or buy decision, either you make, either you buy, discontinued operation. From there, we
Hello.
look at linear
I
programming.
mentioned okay, linear program will be the last.
Then after that, after the linear programming, transfer pricing, then we'll end the class with variance analysis. Right. So thank you so much. I will end my own class with variance analysis, while my guy will continue with his own. I'm sure he will finish his own part as well. Right. So thank you so much, everyone, for joining, and enjoy the rest of your evening. Thank you. Debbie, you say you will feed me. Me, I'm still waiting for the menu.
So let me buy you food tomorrow.
Don't worry, we'll talk. Leslie, you see, you can't buy me food. Leslie,